Good morning, traders and investors around the world. Thank you for joining us for this Wednesday, October 27th edition of Pre-Market Prep with StockOdds. Joel Elconin, joined here by Mr. Rob Friesen. And today is going to be all about education. We're not going to look at these choppy markets. I'm not going to talk about the S&Ps and gold and crude and Bitcoin. You guys have your quote monitors up. You guys can see what's going on. Today and moving forward, this is going to be about education. Mr. Friesen, how are you doing on this wacky Wednesday?
Yeah, but when you tweet it out and say tricks up his sleeve, okay, yeah, okay.
Well, you got a short sleeve shirt on.
Tricks. Aren't we getting to trick or treat season here? We're in trick or treat season, right?
All right. Yes.
All right. So
what do you got for me?
Let's get started here. So it's really important to create scenarios for your trading plans, right? So when we talk about stock odds, it's all about probability and statistics, right? So we're looking at, what has happened in the past and what that likely outcome will be going forward. So here's the behavior, here's the signal, here's the subsequent performance. Now, of course, there's no guarantees, it's probability based. So with any trading plan, we've talked about if-then statements. So the same methodology applies to scenarios that you need to create. And, we've had a significant run up. We've talked about this last week of October being, a bit sideways. So we've obviously exceeded that in a couple of days. And, it's likely that it could soften a little bit. So think about your swing high, swing low. November is such a
Rob, I want to inject one thing here. Also, I think it's important, we talk about swing highs and swing lows. I always like to emphasize to our traders and investors, the closes are very important too, because that is where the institutions are marked on their big positions. And if you don't think that those closes are significant, those all-time closing highs or low closes a move or not, then you got another thing coming. But you mentioned swing high and swing low, and I just wanted to mention closes are very important as well.
Right. So, when we came into today, some of my traders were asking, is it a risk on, risk off day kind of thing? And it's a little bit mixed, and it is, we've had a pretty good run. We've seen some risk on in multiple days in a row. And, we started to, we saw Tesla almost hit 1100 and then pull back quite significantly within, 30 minutes or so. And so there was other technology stocks that also started to really pull back when that happened. Coming into today, you kind of see a mix of some risk on, risk off. But what did you see pre-market? A move of the TLT higher, the yield lower. So it kind of favored, a little bit more of the interest rate sensitive defensive names, like utilities, things like that. But it's still this mixture, right? And you have a little bit of a relief of sort of that inflation message, but it's still there. And that's what's been disruptive these last couple of months. So if you've kind of been in a lot of different strategies, trying to find your way a little bit and having challenges, it's really that we haven't experienced that aggressive of an accommodation for inflation, since the 70s to 1982, where we had it very disruptive. So most people in our room probably weren't trading back then, or may not have been around back then. So, so it's one of those things where you get regime changes and it can be temporarily disruptive. It likely won't be forever, even if, it's persistent for longer than some people expect. So just remember, running various scenarios is really important, and also strategy development. So forming a hypothesis about something. and then curating the correct type of instruments to trade within that. So for example, we could talk about a class arbitrage. You know, Under Armour has two classes of stock, UA and UAA. If you're going to tackle that, you trade it very differently than if you were going to go and tackle, you know, trading MicroStrategy or something like that. It's going to be completely different. Even if you were able to pair, say, MicroStrategy with, you know, a Bitcoin ETF or whatever, since they tend to have a lot of Bitcoin promotion there. So you might want to pair something like that. That's going to be a completely different animal. I mean, Coke and Pepsi, trading those two against each other are very different than trading Under Armour with the two classes of stock. So you may have a hypothesis, you may have a strategy that you want to do, but you got to choose the right instruments for that strategy. So I want to show you something here. So I'll share my screen. Get rid of this thing here. So one of the things you can do is, this is our streak report. And I don't think, to me, I don't think that the message that I want to convey here is in the power of the streaks as a signal and as a complete strategy. Okay, so that's not the message. The message is utilizing something to get a building block to build a bridge to something else. Okay, so let's look at, this is in this universe here, based on how these sliders are set, you know, the volume and the events and things, there's 452 symbols in this universe here. Okay, let's look at something. Look at the distribution of streaks. So -1 is the largest sample, right? So there's 164 symbols that are -1. This is constantly going to be changing, this distribution of streaks, and +1 is the next one, and so on. So when I think of developing a strategy, it's going to be completely different if I develop it for the price discovery area here of, you know, -4, -5, -6, +5, 6, because there's not as many samples, there's not as many symbols that qualify. And it's going to be quite different in how I frame the if-then statements. If you want to be a noise trader, that means making a lot of money from just, you know, noise and randomness and just one day up, one day down, all that kind of stuff. It's going to be very different in choosing, you know, distributions in this area versus the outliers. Make sense, Joel?
It sure does.
So you would have to then say, you know, what kind of symbols show up here? How am I going to trade those? That's a very different strategy. And there's nothing wrong with saying strategy number 1 is this. Strategy number 2 is something completely different. And you might even allocate 80% of your resources and capital and efforts in the first strategy, and only 20% of your capital and efforts in the second strategy. There's nothing wrong with that either. Okay. And then besides the distribution of streaks, you have, which is just put into actual bins of how many times they've streaked. This is the performances coming out of it. So you see something interesting here in 2 streaks up and the average performance. So this would mean it's quite a lot of expectation there for the ones that meet the 2 streak category, mean that they probably expect a third day, you know, expect a follow through type of situation. So that's part of it. Then we move into the same thing for, let's say, RSI. If you're looking at RSI and some of the symbols, let's go to the next page. And this has, you know, the bins for the amount of symbols that, in that same universe, we've got how many on this universe here? Let's see just a sec. 400 and something probably too. So 463 in this universe. And so these are the RSI breakdowns and how many symbols fall into that category. So in the 50 to 50 RSI, which is right kind of in that mid zone, you have a lot of symbols falling into that, right? And then this is the average performance change. So in the 70 to 75 is where you see the biggest expectation. A lot of people tend to sell things that are getting into the 70, 75, thinking that they have to come down. It's not an extreme outlier like 95, but it's gone up a lot. And if you combine that element of how many days in a row has it moved in the same direction, and the fact that it gets into the 70 to 75 bin on the RSI, you might be tempted also to short those type of symbols. Okay, but the expectation is a positive performance. So it's not a great area to get short. So just take a look at the bins and stuff, and then let's look at stock odds for like running a screen for streaks. Okay. So then when I curate streaks, I then take those symbols that I'm looking for, the category that I'm looking for. Say I want to find things that are +3 or -3 streaks. I then can take those symbols and put them into the symbol list and then run, say, a %B or RSI screen from those symbols. You follow what I'm saying here?
I gotcha.
Okay,
yep.
So let's look at it. Let's look at something like this. If I was to draw this out, do you have a different perspective of, say, something going down? Whoops, let's make it a red here. Something going down 3 days in a row.
Mm-hmm.
Do you feel differently than if something was to, say, be just down 1 day? Like, what is your sentiment? What does your experience tell you of a symbol that's had a 3 down day streak versus just 1 down day?
It's going down.
Well, it's going down, but as far as a mean reverting opportunity, it could be interesting, right? Do you feel like in terms of a buy side market, that something that streaks that many down days in a row is more interesting than the one that did 3?
Yes.
Right. So we call these, the outliers. There's not as many samples of that, and there's some price discovery. So yeah, they could slingshot back very, very easily. But what is the sweet spot for like getting good mean reverting type reversals? So a hypothesis could be that 3 is a good number to look for on the downside. And again, this thing is blocking me here. So on the upside, 1, 2, 3 as well. So if you're looking for mean reverting, or it could be 4, it could be different, a little bit different on the upside versus the downside. This is where your exploration needs to happen. So you say, because it's a buy side market, I see a sweet spot in 3 down days, but because things tend to follow through on the upside and volatility actually gets reduced as things go higher, I like the sweet spot of 4 streaks for reversals, for mean reverting reversals, right? So over the long sample, professional traders have made a lot of money from mean reversion, from providing liquidity, from correcting inefficiencies, things like that. It's not all about just finding, a trend trade and hanging on for dear life as you go up with the trend, right? I mean, even let's look at what happened with Tesla yesterday. It had a pretty good 2-day run, and we got close to 1100. And depending where you bought it, you might have bought it at 11 or 1,060, thinking, oh man, this isn't going to 1,200. This is going to 1,500. This is going to 3,000 because some people have advertised that number. So I'm going to buy it at 1,060. Well, you may not have been able to sell at 11 or 1090 when it rolled over. And within, a few minutes, it's down at 1,017, 1,012 even, I think, on that pullback.
Quickly.
My point is this: your 1060 is now underwater significantly, right? That's a lot of dollars to drop in a very quick fashion. So, trend trading is great in hindsight when you look at charts, but when you're actually trying to pay up to get into something along the way, it's a much different equation. And not only that, do you have Tesla? Can you type Tesla into your screen right now?
Do you want the quote window?
What is the bid-ask spread on Tesla?
Well, here, it's going to be constantly changing, but
what is it on? What is on average right now? The bid?
The bid is 60.70, 30 cents.
So it's a 30-cent spread, which isn't too bad for that price of a stock. Let's type in another one. Adobe should be a pretty big name. What's the spread on Adobe?
50 cents.
50 cents, and that's only $600 and something stock, right?
Yep.
Okay, so 50 cent spread. So that means when you want to get into your trend trade because you think, oh, it's hit my thing, it's going up. I got a moving average crossover. I got, broke a level. It did a previous day's crossover. Whatever it is that lights you up and says, hey, this is a trade. When you go to get in it, how do you get in it? You're going to pay that 50 cents? Does that not, overwhelm your edge? Like, who has a 50 cent per share edge in trading? Listen, guys, I've been working with professional traders since 1998, but we can go back to 1992, even when Bright started, and the average per share that people have made over the long sample making money, is going to be between the 1 and 2 cents a share, not 50 cents a share. So when you're playing that game of paying across that spread, now you might be getting some advantage on internalization. Maybe you think, okay, well, I'll put the order in and I never pay that full spread. Well, in a sense, that swing works both ways when you get filled through internalization, versus being able to choose your venue and send the order in. So just be careful at how beautiful something looks versus the reality of actually getting in. When you're a noise trader, you take a different approach. If something crosses an indicator and everybody's in and it's starting to streak up, I'm looking to, maybe provide some liquidity at the top end or even a little bit above that offer. Because if you get filled on that, and then you can cover in the air pocket, you can cover between the bid and ask spread, or even let it roll over and cover, you can harvest, you can pick up that spread versus paying the spread. Okay. So anyway, just an aside that how challenging it is to actually be a trend trader when something's in play. Now, the other option is, you're buying it as it's falling, looking for the turn. Well, then you have to have a real good probability backdrop. So there's nothing wrong with going and grabbing your StockOdds stuff, creating a wish list. And if something drops, like a symbol that says high probability for today, like NVIDIA of being up, and you get a nice down move after the open or something and can buy it on the cheap, believing that the probabilities are still there for you, then by the end of the day, that could work out really well. But you bought it at a discount, and you could even provide liquidity, get paid, through some ECN rebates on ARCA, pays 20 mils for providing liquidity. So these are the things that the dynamics of actually, going and making this happen, which is why a lot of people take and do trades at the open, because it's an auction market. It's liquid, and you can kind of choose the price of your participation, right, where you want to participate. So go back to this theme of 3 down, possibly 4 up. You can go to StockOdds, you can curate that, and let's just take a look at some of the symbols that come up here. We've had a 5-day streak on AMD, NVIDIA, Exxon 3, Oxy 3. So there's one, GE, and I have a chart on GE up here. So let's look at GE. Says for today, from the close of yesterday to the close of today, expected to be down, and it's had that 3-day streak. So let's take a look at it. So there's the chart. Now, this is a very, very different chart than looking at some of these tech names that, tend to, have extended moves day after day, right? And the names I'm talking about: high volatility, speculative. They go on a trend either up, for a while, or they go down for a while. So they might tend to not look like this type of chart at all. So this is boring GE. But look at how many times there's been, streaks of 3 days, or 1 day up, 1 day down, stuff like that. So this just recently had this 3-day streak with a very substantial reversal yesterday. StockOdds was saying that just from that streak basis, it has a probability of reversing. And it's the type of symbol that, is going to be that sort of choppy, noisy, like you're going to get good mean reverting opportunities. So that's what I'm talking about, is when you form a hypothesis and say, I think there's something here in this 3 days up, 3 days down thing.
Okay.
3 days down, 4 days up, whatever. You can take those symbols. So we can take these symbols here and we can pop them then into this symbol list like this. And then you can go run another screen and see if that 3 days up is going to give you, we can take a look at RSI2. We can say, okay, open to close for today. Look at the odds, 38, and average performance is negative. So a great short candidate from, first was the streaks. Now I've taken the streak symbol and put it into another screen. And now I can go to %B and take a look at that as well. It's also in agreement that the odds are 41.4, average performance negative 0.50. That's just for open to close. So that's saying that GE has some power to perform today from the opening event to the final closing event of the day. And this is, then working with the right type of symbols, using what has occurred and the, expected outcome for the next time frame. You could also say, if you're using a 3-day up or 3-day down, you could then put a, what's expected to happen over the next 3 days. So you could say, I want some really strong arguments for maybe the next 3 days to be the other direction. And we could compare that as well and see if it still holds up here. So the odds for the 3 days are 24.1, negative 0.69. So you've had 3 days up with GE. You might actually get 3 full days down. You see where I'm going with this?
Yeah, I do.
So, the streaks may not be by themselves the most powerful signal and subsequent outcome, but you can certainly use it to find 2 main types of strategies. The first is things that are really noisy, choppy, mean reverting, like they're not going to go to the moon, okay? I doubt, I mean, I can't say it's impossible, but I doubt GE will be trading at $2,000 a share next year at this time. Okay, it's doubtful. I can't say the same thing for Tesla. I don't know. It might be at 2,000. It might be at at 500. I don't know, but it's not in the same category, right? Tesla and GE are not the same behavior, the same DNA. So that's important, that you take and identify the universe that you want to trade in. And it wouldn't be any harm to identify a small universe, or even in a sector or industry, and you just pop those symbols into your screeners because you're working with something that you're familiar with, not grabbing some symbol that you have no idea who it is, what it does, or what it looks like, or how it behaves. If you want a career of this, then be that surrogate specialist by really identifying universe, strategy, and make sure you select those right symbols for the strategy. So if I want price discovery, I want some, real great, huge rippers, opportunities, whatever, that's a different class than the GEs.
Okay. All right. Learning to classify stocks here on Pre-Market Prep with StockOdds. Joel Elconin, joined by Rob Friesen. Rob, I like this format, the education format. We're going to be doing more of that in the future. Everyone, have a great trading day. Back with you tomorrow morning.